Hello, traders. Happy Friday. Let's talk about stocks and crypto. I know that things have been looking on the bearish side recently, but there were some key supports that actually got held this week on both because they're basically moving about the same. And we're going to take a look at that and see if we're out of the woods yet. I don't think we are. I don't think we are. I haven't seen the kind of the rollover into bullish territory that I want to see to say that this trend has ended, even though we get to a point of some elevated fear among a lot of market participants and commentators. So we're going to look at those levels here in just a bit. Also, look at some of the memes. I love memes, and that's coming up after the music. So hang out. We'll get right to it in just a minute. Do, 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 do. All right. What's going on, everybody? Happy Friday once again. Good to see folks. As always, if you got the symbol to look at, make sure you post it in the chat during the live stream. If you're catching this later, make sure that you join on Discord to ask questions. A lot of the plays that I'm making over the last couple of weeks, they're still in play. I got a couple of questions from Discord and TradingView to go over about Dollar General sector rotation. That was the topic for earlier this week, because at the beginning of this week, the sector rotation that I talked about was very much in play. But as the week went on, it started to reverse, and tech started to get a little bit of life tech and risk stocks. And so, yeah, there's been a lot of fear going into this week, as it is, and I think it's very interesting to look at social media and see what people are saying, and oftentimes it's good to go against that. But the reason I wanted to start going short both Bitcoin and stocks 2 weeks ago, basically, was based on the trend, the Ichimoku trend, and in the case of uh, the stock market, we'll look at first right here. This is the daily Ichimoku cloud. I've talked about a lot in videos. It's the kind of the simple way that I like to look at a trend on the daily. Is a really good method. And if you notice, going all the way back to November of 2023, over 2 years ago, it has stayed pretty consistently above it, and only really now in this particular point of time has it actually breached that trend to the bear side. The same thing I've used and talked about a lot in Bitcoin. Essentially, the Trump pump, as it were, back during the election, November of 2024, came up, made a new all-time high here on Bitcoin. But then Friday, what is this? Getting on about 3 weeks ago, we finally got below the cloud. Enough time and price passed for it to enter into a bearish trend. And so those are the things that are in play still. And I shared some of those memes from earlier. Let me pull that one up again. It's interesting to go and watch on X, or formerly known as Twitter. Some of these things kind of develop where, yeah, it was this one right here. Screenshot of that. The two things I want to talk about this week in particular to Bitcoin and things like that are the fact that whenever we start seeing an update like this, people start to get really excited again. And then the other one is this one. And I really want to kind of speak to this one a lot more this uh, because this is where people really seem to get emotional. Okay, a lot of what I read from people is that, oh well, it's just one more push up. One more push up in crypto is all they need, and they can set themselves up for life. And then they won't have to worry about this anymore. They won't be caught in this cycle of volatility. But is that really going to be the case? I mean, is crypto going to ever not be as such? Is it ever not going to have massive multi-X runs up and then finally enter periods of just a few months of consolidation where people spend all their time on social media memeing to each other about how rich they're going to be and how sorry all the poors that didn't get into it are going to be, to the point where when it does finally do a correction, their entire life has been thrown into disarray. That doesn't sound like a very good way to live. And I've actually, some of the more fervent people I've talked to insist that one day when we're on a Bitcoin standard, there will be no more volatility. The price will settle somewhere at about $1 million, and they will know then that they can start taking that Bitcoin that they bought now and buying all the things that they have desired during this current period in their life. And I just don't think that makes any sense. I don't think, maybe, I mean, who knows? The market can be irrational longer than you can be solvent. Maybe that could be, but it's still going to be volatile because there's the only thing that these cryptos are based on, because they don't actually generate wealth, they don't actually produce goods and services, is people's perception of value. And that's going to be based on emotions. And as far as why are we entering into this particular mode where price is going down, I don't think anyone has an explanation. I think they're just very disappointed. I think there was a lot of excitement going into the all-time high, and there's a lot of befuddlement. Why with the strategic reserve being announced? Why with Trump being pro-crypto, is it not mooning along with every other cryptocurrency that one particularly likes, whatever it may be? I think broadly, Ethereum is one of the big losers out there. Unfortunately, it's being replaced in terms of market cap by Solana. That's one of the things I've really started to kind of notice. Not buying it yet because I still think that we're in a bear cycle of crypto. I think it's already begun. That's the fundamental thesis I'm operating under. But I do have to say that this level that I marked off a few weeks ago and noted as the end of my short, which began on Friday, February the 21st, 79,185, or let's call it 79,200, 79K200. That was a level that we tested this week once again. Kind of closed below it, but bounced off it again. And now we're going to start testing some resistances. But I mean, really, this little area right here, that was that Trump tweet from Sunday 2 weekends ago. And you would think if it was going to go, it should have gone. So there's a lot of excitement today, up 4%, up, what, a couple $1,000? But it has not really conclusively recovered yet. Now, that's all kind of tied and correlated to the stock market. The key level that I was looking at this week for us to make or break was on SPY 561. That is the 50% from the August low to the last SPY all-time high set in February. And we did close above it. So that's a bullish sign. On the VIX side of things, the key level that I've been looking at here, VIX has been elevated, closing higher, closing higher, closing higher as the last few weeks have been going on. And then, of course, now it abated. I was looking for maybe a blow-off top on VIX, the volatility index, at about 39.22. That would be a great market timing for a bottom, but we didn't quite get there. And then these last few days of this week has started to fall off. And now around this 22, 21 area, it's been breaking below it. So there is a chance going into next week that VIX starts to decline and we get back to quote-unquote normal, boring 14, 15, 16 VIX. It's going to make trading a lot less interesting, especially than it has been the last couple weeks. But that puts us back into new territory of the stock market where we can potentially start to say, hey, what kind of new all-time high are we going to make? And so that's what we're going to be watching next week. But the bullish side of things on stocks have just edged up this today, just Friday, have just edged into, okay, this was a support. We very likely held it. You know, if it makes it a little bit clearer, if we go on the weekly, the close of the weekly held that level. So that is a bullish sign. Cosmos is dead, and you're still stacking. So, I mean, I asked someone this week, I made a New Year's resolution not to argue with Bitcoin folks about things, but like all New Year's resolutions, you break them. Why? Like, there are companies that produce goods and services where you, as being an owner of these companies, can be entitled, as a shareholder, can be entitled to dividends. You know, that's how what retired people live on, is dividends. You know, I try to set myself up financially where I have trading. That's, bonus, which I then turn into invest, and then I pay my bills through residuals, like the passive income that everyone wants to get to. That's the dream. And when I talk to people in crypto about that, crypto doesn't generate a dividend. And now they've started using MicroStrategy's STRK, their preferred stock option, to generate dividends. How do they generate those dividends, pray tell? By selling shares. Because there is no business revenue. It's like I've said before in weeks past, it's basically a Ponzi created a Ponzi. It's pretty much out in the open. Staking is your dividends. Yeah, but if the staking stuff you're getting is going down, then you're not making any money, are you? What's up, Brian? Yeah, memes kind of like really, why memes? Because memes really kind of capture what's going on in the people's mindset. I think it does in a lot of ways. Yeah, it does. It does. And, another meme that I've kind of noticed in, not just in crypto spaces, but also in the broader market. Let's talk about, your gold bug people who, They were celebrating a new all-time high on gold. Now, I've been interested in gold from a trading perspective, but it's very, very, very difficult for me as someone that likes reversals and tries to stay away from whatever's people are memeing about. I have not been buying into this gold trend yet. Okay, I'm going to be patient about it. I don't feel like I need to own it, but that's not what people tell you. That's not what people like Peter Schiff tell you. I listened to one of his live streams about a week or two ago just to make sure he was still the same old Peter Schiff. And whether it's gold or whether it's Bitcoin, a lot of people, the product is not gold. The product is not Bitcoin. They're not selling gold. They're not selling Bitcoin. They're selling fear. And then the solution to the fear is gold and Bitcoin, because inflation is horrible. It's just going up, up, and up. We're already living in the Zimbabwe or Weimar Republic, except that we're not. And we're actually at some of the lowest levels, according to some metrics, that we have been for many years. That's kind of inconvenient to the narrative. So, there's this thing that they talk about when you're in psychology, when you're like a therapist, body dysmorphia. It's where, people, gym bros will kind of get in there in the gym and they'll always think that they're small and they're taking lots of steroids to get themselves up to this, monstrosity size human, or people will think that they're too fat, and they'll always, even when they get very low body fat, they'll think they're too big. That's body dysmorphia. What I notice in a lot of these spaces is economic dysmorphia. It doesn't matter what the statistics are, doesn't matter what the actual data is. They will tell you that things are worse than you can possibly imagine, and the only thing that's going to save you is to YOLO into their particular fear asset of choice. And last week, I went through my sort of thought experiment on what is the true value of gold and silver. You should go check that out. I'm not going to rehash it here, but I think that they're pretty consistent stores of value. But now you start hearing people talk about YOLOing into gold and silver as a catch-up trade, as some sort of abatement for all this inflation that's coming. And I don't have an explanation for why inflation being down makes gold go up, but the correlation between the two have not really been clear. I mean, I think a lot of it, just like everything, is based on hype, people's perception of value. And old Peter Schiff, he's had some pretty fun. Let me see if I can pull this up here. GC1 divided by BTC USD. Let's try this. Can we do this? Yeah, so this is gold according to Bitcoin price, and they do sort of have a reason to flex a little bit when they look at the gold versus Bitcoin price, because as Bitcoin has been stagnating, gold has really been going on a tear. And so which one is the better metric, or which one's the better one to buy in cases of fear? Well, in my case, I always thought it's guns and ammo, because they keep pace with inflation and they're more usable than either one, especially when the power goes out. But I think ultimately they're basically two sides of the coin, same coin. Get it? Gold is your boomer fear stuff, and Bitcoin is your millennial zoomer fear stuff. Unfortunately though, Bitcoin is tied to stocks. It's a risk asset. And I did a whole breakdown of that in a Trading View idea a few weeks ago about what's going to happen, or what is happening, as the stock market goes down. But let's look at some of the technicals, and then we'll look at some of the specific stocks that I follow and I post about, Dollar General, Tesla, and things such as that. But what I've been looking for all week on Bitcoin in particular is this is a really, really, really hard zone to short, because I want to short. I want to short it to break and continue to break this support. That's what I still want to do. And so really what's interesting is all these good trades that I see, not all of them, but in recent times, the good trades seem to happen on Fridays. And that makes it makes it very hard to play using the standard market because it's closed, and you never know now what Trump is going to tweet. But the Friday, several Fridays ago, was where where Bitcoin finally. Let's just go back in time and illustrate a little bit. So, for those that haven't seen videos before, what I like to look for is price to be below the cloud, and then the momentum or the Chikou of Ichimoku also get out at the same time, and that's when you have a trend flip. That's when you have a trend flip into confirmed bullish or bearish. Same works on the bullish side, and I've done a lot of studies on when price and the momentum gets on the bullish side of cloud in crypto, Bitcoin on the daily, and how following this pattern of when price and the Chikou gets out at the same time, going long and then staying long until this inverts, that actually outperforms Bitcoin about 5x from just HODL. In other words, if you went back to 2011 and you just bought one Bitcoin on either strategy and you just held that one Bitcoin, never sold it, or if you flipped it back and forth based on the Ichimoku daily, then you would have 5 times as many Bitcoin. You have 5 Bitcoin now instead of just the one. People don't want to hear that if they're big Bitcoin maxis because 2 reasons. One, because they don't want to believe that trading can work because that's what their Jesus, Michael Saylor, tells them. And also, they feel like if you sell Bitcoin, you're kind of going against the whole ethos, which is to never sell it. The reason you never sell it is because then you would create downward pressure. And yeah. So I don't listen to that, and I have the back testing to show it. And we'll revisit that when and if the trend reverses. But I'm operating under the premise that we're probably going to hang out here for a while, just like we did back in. This is going to be a lot like 2021, I believe now. And by that I mean the early part of 2021, where you had the first all-time high run, April 2021, and then price came down, got everyone really nervous, didn't really go anywhere, kind of frustrated everybody from the bulls to the bears. Things don't go down all at once, especially if you look at this chart right here and you see why. Because just as we're looking at the daily for it to be correct, for a bearish trend to initiate, that's a long way for the momentum to get on that side. And so you needed more time, you needed months more to finally get the weekly correct before the actual bear trend could begin. You even got a whole another all-time high. I'm not saying that this scenario can't happen again, where we get a push up because the weekly is not set up, and then we get the bear trend. But again, it goes back to, we're in this period here where all these Bitcoin faithful, that a lot of them I know have staked their entire retirement savings and future into this volatile asset. You can't be having a good life right now. You can't be having a good life, and this is going to be, if you get out of this right now, you're just going to be right back in it again. This isn't the solution. Companies are not going to risk their balance sheet on this kind of volatility. Hate to break the bubble. It just does not make any sense. And no matter listening to this podcast or reading this book and learning about Bitcoin is going to change that reality. But here we wait. Technically, what I've been looking for all week is basically this 8,500 level. This is a resistance that I wish would have triggered earlier on the week, but finally we got it here on Friday. Why this level? It's a confluence of the 50% down and a volume profile node right here at about, let's look at these 2 levels. 84,500, and of course this leg down is here. So this is the resistance as we go into the weekend, and this is where we finally popped up to on Friday, and where essentially is going to be the dividing line between long or short. If it holds this resistance here, then we will see another test of this support, and it's going to be the 3rd time that it's tested it here, and it could very well continue down. So we shall see going into it. So, all right. I finally got some people to make some comments on the Dollar General post from a little while ago, and I want to go into that. So, Dollar General, let's find the idea. By the way, if you guys have questions or symbols to look at, make sure you post them in the chat. I'm here to talk and here to get ideas from you guys. I mean, in fact, uh, they've been a little volatile here recently, but Hershey's is one that we picked up that came from our Discord. Multiple members noted how it was set up at a major multi-year low. This is the kind of stuff I like, by the way. Like I can't buy this. I can't. Sorry. I cannot do it. Sorry, not sorry. I'm not going to buy this. I do like to buy stuff like this. That earnings kind of gave a little tip down, but I do like to buy stuff like this. Stuff that everyone thinks is dead. This is the kind of stuff that I like to buy. I do. I can't bring myself to buy stuff that's been yeeting for a very long time. And that's actually a pretty good pullback too. And so another one is Dollar General. Now, why am I buying Dollar General? And a lot of people question that because part of, not the whole thing, but part of my long on Dollar General had to do with the sector rotation that I was noticing, which was going on fine for 2 weeks and now did a little reversal as the market reversed. That doesn't tell me that sector rotation is off. It just tells me that it's definitely in play. So, I'm glad you find it funny. See, the problem is I can't tell jokes. Me, when I say things very seriously, for some reason people find that entertaining. And so I just have to speak very emphatically. And I say some crazy things, which people think must be joking. But no, I'm actually dead serious when I say these things. But thank you. Thank you very much. I can never do stand-up comedy. I can just speak what I think is true, and it's just a little crazy. Anyway, so Dollar General, let's look at it from a technical standpoint. Now, so I made the post. Let's go back to it with my rationale. Hold on. Oh, here we go. Ideas. I told a friend of mine, when I got into Hershey's, I said, "Hey, I'm getting Hershey's. That's my pick for this year." And he said, "What are you talking about? Like, RFK is going to ban sugar, and Ozempic means people aren't going to want to buy their products." And I said, "Okay, thank you. I appreciate you telling me that, because that makes me want to buy it even more because everyone thinks that it doesn't make any sense." Okay, but something's coming off of a multi-year low with a bearish narrative. Gimme more. I can't buy stuff that everyone's yelling about on Twitter. I mean, it's just do you know why the inverse Kramer works so well? It's not because he's bad. He's terribly bad. I mean, he's been doing it for years. It's because he's more of a media personality than he is a hedge fund manager or trader. Now, he has to do a show. He has to keep a public profile where he talks about the stuff that people want him to talk about. What do they want to talk? Like, if he goes on and he starts talking about Hershey's a couple of weeks ago, people are going to turn it off. They're like, "Look at that thing. It's going down. I don't want anything to do with that. I don't want to buy that." No, he's going to talk about the stuff that people want to talk about. And that tends to happen at highs before it rolls over, when people are the last people are finally getting into it. And so my friend, he's like, no. He did buy it though. Hashtag I don't do, hashtag not financial advice. I never tell people what to do, because if they ever take what I say, they come back and then they're asking me to manage their trade for them. No, I'm just telling you what I'm doing. So anyway, it's a consumer staples play. There were some technicals going in, but here in the post, I talked about what could potentially happen technically. All right. You see this trend. This is a big bearish trend. Okay. Bearish, as we talked about early in the live stream, when it comes to the Ichimoku cloud, where price is below it as well as the momentum, that is a bearish trend. And you can see how it never, since March of 2024, that's a nice little spike, by the way. Let's go back to the chart now. Bring up my spike indicator, which, by the way, you too can have for the low price of $9,999. No, it's for free. If you send me a message, join the Discord. All it is just looking for a big spike that you can do a 3-to-1 on. And man, when people, ooh, we got too much locked in there. When people think everything's going one way and it slams back the other, that makes for some really good trading. But yeah, that March was earnings. Spikes on earnings, by the way. Mwah, love it. Love spikes on earnings. Very, very good trades where price swings one way and then comes back intra-bar within the same bar or sometimes the second bar. Look for these. Look for these false breakouts. They're money. So, yeah, anyway, starting at the March 2024, broadly, it really started back at the past the all-time high, in 2022. Again, you had a bearish trend, never violated that daily cloud until you got this little thing in December, but that was very short-lived, and there you're bearish again. But either way, that is the trend as it stands going into the moment where I noticed that, hey, sector rotation is going on. Consumer staples, which are things that people buy even in bad times, are starting to be the play. Yeah, wow, we've got a good little situation right here, because what could happen, because price is getting into the cloud, momentum has a very thin cloud to come through right here. We could get price and momentum on the bullish side of it. Then we're good for a trend, and then we can see this go up. What would that look like? Well, it would ideally look something like it did here. That's what I want to see. Consolidation, get above the cloud, let's go. And that's what we got by taking a little bit of risk, and now here we are. The trend has now flipped to the bull side. And that's what I wanted. And I'm jumping it a little bit by getting in before it happens, but it's risk adjusted. In other words, if we would have broke that low right there, I would have gotten out. And then some people asked me, a few days ago, hey, is earnings, which was this week, going to bother you? No, because I'm already in profit. And so again, I don't ever take things the day before earnings. You want to give yourself enough time, as the case was here, where it was about 2 weeks before earnings, for you to get some good bullish movement. And then even if you have some crazy little earnings movement, you can be okay. Never even violate your stop. And yeah, I'm just going to let this sit. And even though we're starting to see an inversion on sector rotation, the answer I gave him was like, oh, the sector. Someone asked me in my comments. Let's see. Someone asked me in the comments, which is a very good question. Let's see. Yeah, the trends reversed to bullish, and they asked me about this. Yeah. So, if it gets back into the 70s, like I said, that's a stop out scenario. But I'm already in good on this one. And they asked me, let's see, sorry, I hate to be bothered, but now with the numbers, the market is back to buying risk on stocks. Staples have had double top. They're looking at the XLP, seeing that maybe they've topped out. The answer to this is very simple. The reason I want to trade individual stocks, like Dollar General in particular, or anything for that matter, is for the alpha. And alpha basically means outsized gains that are independent of the market. If you buy something and it goes up the same amount as the market, that's beta. It's totally correlated to the market. Alpha is your uncorrelated movement outside of the market. And so with individual stocks, you have a chance for alpha. The reason is not just because of sector rotation with consumer staples. The reason was there was a technical setup, a spike trade, as it was on the 30-minute that happened. Actually, let me just show you that. So the spike that happened was here on Tuesday. This came up on my spike scan. In other words, it's one of those where you have a spike down and close back up intra bar. This was the 9:30. Those opening spikes at the beginning of the market, those are really good. But if we zoom out and we do a volume profile analysis of this little era in time where price was hanging out almost 10 years ago, 10 years ago, that volume profile puts us at 71.51. And then we zoom back into the 30-minute, and that's again where people bought it up. That's what I want to look for. Comes around every once in a while. It's one of those have-to-take trades. But you've got a multi-year low, spiking. People obviously bought it up. And that gives me a good point where is if it does break this spike and for some reason it comes down, makes me very sad, and I have to close the position. I know when I'm wrong. But we had our earnings. Seems to do okay. Seems to do okay. Held the first earnings. Trend is flipped bullish. Sector rotation can happen, but it's its own independent company, and we'll see what happens here. So I'm still feeling pretty good about this. What's up, Flor? Do you think VIX is going to spike up again like in August 24 when it reached 65? Well, thank you, considering the trade wars. Well, I'll answer your last thing first. There's always a thing. That's what I've noticed from doing this for well over a decade. There's always a thing that people are talking about. Tariffs, trade wars. Last year or the year before, it was war in the Middle East. If you go back and look, that was August of last year. What you need to do is it's good that you're noticing the spike at 65, because one of the things that I look for is a 50% retracement of the past spike in VIX being a very, very telltale sign of where the market may bottom. It's a very interesting timing element that I've done videos about before. If we go back and we just kind of look at, let's look at, this is in March of 2023. You remember March of 2023 where the banks were going to fail? You remember that? That was the thing, okay? Small banks were going to fail. That was going to bring down the whole market when really it was just about 3 or 4 crypto-based banks. That was a great time to buy regional banks, by the way. Just as kind of a quick aside, financials have been really getting hit, but yeah, TFC is one of my favorites for this regional bank. Reason is it's a great dividend play. They keep on taking dividends. I picked that up in May. That was when it did this on the weekly. It did what I call a TS recap, this little red line, which is from Ichimoku. Basically got back above it. And in, here, I picked up TFC at about 29. About 29. And so that was how I played that thing. So really what I find, and I still had to take some downside, but I felt pretty comfortable about it. No one wants to take that. But look at whatever the thing is that people are talking about. The thing now is trade wars. The thing was inflation, if you recall. And now, as I showed earlier in the live stream, inflation by some metrics is at the lowest level it's been in many years. Remember when we were going to be in Zimbabwe? Whatever happened to that? But anyway, remember the thing, banks were going to fail. So this was probably one of the more easier narratives for me to buy in recent years. Was March of 2023, banks were going to fail. Huge buying opportunity to go against that. Once you kind of figured out after a few weeks, okay, well, wait a minute, it's not going to fail. And then where did it come up to? Look at that. Look at that 50% retracement. Another thing, if you're new here, don't watch my videos that much. I keep things very simple. A lot of people want to use different Fibonacci numbers. 50%. Just 50% retracements. That's all. 50% retracement of this move down in this bank stock is where it kind of came up here at 47.23. Double topped right at that level. 50% is from the swing low on Bitcoin is where it is holding here, 79,285. And of course, 50% on SPY from the low in August to the all-time high is the key level now. So I shouldn't have to go through too much explanations of 50%, although I could make a point about COVID low to 2021 all-time high on SPY also being a low of October 2022. So 50%. All you need to know about doing retracements. Nothing fancy. But anyway, 50% on VIX. Now that's where it gets very interesting. Now, like everything in trading, does it work all the time? Well, about 70% of the time it works all the time. Yeah, that's pretty much the case, right? The case with a lot of things. That's like me. I'm right all the time. All the time is, what is it? I'm right 100% of the time, about 70% of the time. So One thing that I really find really valuable about VIX is when you take these extremes, going back to like we were saying, if you take the extreme and then you go to the low of VIX, that's when the market goes up, 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 up. VIX goes down, typically it's inversely correlated. Then if you grab those lows, I don't know exactly when it's going to be. I just know that if I mark that low, as we would on a daily basis when we're doing analysis, and then you watch for it to spike up to that level, that's going to be a timing element there in the market for you, the investor, who has read the adage, time in the market beats timing the market, but you can actually know better. Again, the 50% from the March 23 VIX high to the VIX low, which is somewhere around the summer of 2023, that 50% was in October of 2023 when another big thing happened that was going to end the world, which was war in the Middle East. But this is the same time, by the way, October 2023 was here when VIX hit that 50% level and timing the market. Well, let's go back to VIX again. So now VIX makes a new low, going down a little bit more. So now we're at a 21.3. Is that going to be the low? Should be. All right, let's see if we're going to hit that 50% again. We're going to time the market. We're going to say, oh, here we go. So there is April of 2024. I don't know what the narrative was there. Someone was talking about something. That's what the media is paid to do, is to write stories about the media. And there is our big low that we had in April. By the way, another little thing I like to look for is those 5 to 10% corrections that statistically you get 2 to 3 of them every year. That was about a 5.86% correction when VIX hit that 50%. And hey, look at that. We're back up to the races again after that VIX hitting its 50%. So that is how I use the VIX. I look for these kind of 50% retracements to be market timing events. Now, of course, we had that. And that's that 30% of the time where it doesn't work. But it creates for us a new 50%. And by the way, I can encourage you guys to do homework. Don't just take my word for it. Go back in time and look at some of these big events in VIX history. Like if we just go back at 2008, and this is where I kind of formulate, it's not just recent times. If you go back to look at the big spike on VIX, probably better if we look on the weekly now because we're going further back in time. If you look at the big old spike on VIX back in 2008, the big one, from there to the low, let's see, is that the 2008? Didn't quite get up to that point. Although, yeah, didn't quite work that way. So let's see. There were some other key events. Yeah. Go back and back test a little bit. Yeah. Should we go back to 40 VIX? Let's take a look. Well, I'm going to be watching for this spike that we had in August to play out, given that this is here. And that's why I've been looking for a VIX spike to 39.22 throughout this whole thing that we've been experiencing. And another thing about VIX you'll notice is that it tends to try to revert back down to lower VIX prices. I wouldn't say the prices, it's more of just an index, but they try to revert back pretty quickly. And what I noticed was you had green bars, in other words, closes higher, higher, higher. If VIX was returned to normal, you should see more red closes. It should very quickly move back down. But instead, we're having kind of a rise in VIX. Now, we had a pullback here that we very much could sustain and come back to lower, but I mean, I don't think that it's been invalidated that much. And so even though we closed below that 50% there, which had kind of sustained it, again, in the short term, boom to boom, these little dips that we had in January the 10th, or excuse me, January 13th, January 27th, January 13th, January 27th. Again, these, if you're a day trader or if you're looking for potential market bottoms, that's how you can use the VIX. Look for those 50% as bottom days, we can call it. And so uh, that's why I've been looking for a pull back up or a spike up to 39.22 VIX. Let's call it 40 VIX if you want to, as a bottom day to really buy up this market, to really buy it up. But we'll see. We'll see what happens because now VIX is starting to return back to normal. And that's why I titled this live stream as it was. Are markets out of the wood yet? There is evidence they are. But I'm going to just by nature be a little skeptical. We shall see. We shall see. I was doing the 50% thingy on Tesla, but it went straight through the. Yes, it did. Let's talk about Tesla. Tesla, the 50% is also what I use. Let me do a little quick back lesson on the Valley of Risk. So the Valley of Risk is where a stock, a crypto, an anything gets to its 50%. This is Zillow. This is my test, my trial case, one where I actually took it, traded it, got out of it. Glad I did. Where when it gets to the 50%, that's the level for a trade. That's the level where you want to try to take a position in it because that's going to be the defining line. But if it gives up that 50%, kind of hangs around there, fights it, maybe gives you a little pop up, thinking that you're in your good position, but then, oh, no, now it broke this low right here. I'm out. I'm stopped out. I'm done, because then you enter what I call the Valley of Risk. And the Valley of Risk is basically a long, dark valley where you don't know where the bottom's going to be. Because you're bag holding, you're making emotional decisions. If you sell, well, then it's going to pop up. If you hold, it's just going to keep grinding you down until you sell, and then it's going to pop up. And that's why it's just you need to try to avoid walking down into that valley and just get out when something breaks to 50%. And so now if we go back to Tesla, I do have some bullish case on Tesla to point out that happened this week. You were correct in noting that the 313 level was the 50%. And yeah, that's a good level to try to take a position. However, really punch right straight through that. Okay? And so then you have to do the hard thing, which is cut. Because you don't know where it's going to stop. However, what it did this week was it finally got to a level, which I'll call it the last level. This is the last level. Oh, it's not going to let me do that. This is the last level of support based on all the past price action here. It had one here at, that's the volume profile POC at 255, but 220. Some of my trader friends picked it up. Wait, I know why it's not doing that. If you go back even further, if you grab the whole thing, whole shebang, it's still just that level right there. The next level is down there. But you have a volume profile level here at 220, and that's going to be the potential level of support, which 218, that's what it basically held. And so this is what is holding Tesla up right now, is that volume profile level right there. But you're still in that Valley of Risk. That's just one potential level for it to revert. I still have several shares that I do a covered call strategy on. It's not really mitigating the loss completely, but I'm still making money off of it because volatility has been pretty high. So it's been really good to sell calls in this leg down. So that's how I'm still playing my Tesla. But am I buying more shares? So my friends picked some up there at 220 this week. But I decided to keep my trading accounts clear of Tesla. And I have a whole separate account set aside for Tesla covered calls. So you de-risk a little and picked up at 220, but still 15% underwater. Tradist is the hardest. Well, the saying goes, trading is the hardest way to make an easy living. That's the saying that you're searching for. What's up, Swaggy T? Buy the dip? Well, I think maybe we might be buying the dip, Swaggy. I did actually put some money in tax advantaged accounts. uh, last week in this because we did that 10% roughly correction, which is that territory I talk about. Like in any given year, it's when I try to make people remember this is kind of a almanac sort of thing. It's just a statistic. You get 2 to 3 on average. You get 2 to 3, 5 to 10% corrections. And what do we have? We're going to round down and say that we got a 10% correction on the SPY that bottomed out this week. Okay. And then we got back above that key level, that the 50% level from the August to here. We closed above it today. We closed above 561. It's bullish. And then, of course, VIX is starting to return. It got below its 50%. So those match. Looks like we might have a potential that this was the just a pullback, and that really kind of fits too because I like to use X as a indicator in itself of the social commentary, and a lot of people posting about how their family members are coming to them and saying like, oh well, Trump's trying to crash the economy, blah 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 blah. Again, I do not get politics. I do not involve politics in trading or investing. I think that's silly. I think, well, it doesn't make sense because people say, well, they affect the economy. But people get a little too emotional and tied up in it. And they make decisions based on their feelings about politics rather than what's actually going on in the market. Let me give you a quick example to make you understand like why this is true. So I'm going to show you this chart right here. It's the same chart. It's the S&P 500. Can you mark for me with accuracy where the president you didn't like took office? Like, can you really? No, you can't. Market go up no matter what. Market's the market. It do what it do. Okay? So don't be silly. Don't be selling all your stocks because who you didn't want to win won. That's not going to work out for you in the long run. I knew, I haven't spoken to them in years, and I'm assuming they're still the same way. I knew this boomer that I used to be in a trading group with, and I'm not using that as a derogatory term. He was literally a baby boomer, retired, who has been in cash since about 2011. At least he was in about 2021. When the market was ripping was the last time I really talked with him. And I asked him, when are you going to get back into the stock market? And he said, oh, well, I can't. Earnings, PE ratios are far too high. All these companies have too much debt. It's all going to collapse. Maybe. But that was about 64% ago. I mean, maybe, but you're missing out. I mean, hell, like wait until like you have a big year like 2022 if that's what you want. If you think about it, this is the market we've been waiting for. If I got $1 for every boomer that told me the market's yes, and that's why I said don't worry about the thing. If I were to get into a little bit of philosophy, I think that as you get older, you of course become more risk averse because you kind of lose the confidence that you can bounce back. You have a lot more responsibilities that you have to worry about: kids, college educations, blah blah blah. Things that fortunately I personally don't have to worry about. And so I've always kind of had a very it'll be fine attitude, which I find a lot of young people do. It's a healthy thing to have when you have your whole life ahead of you. It'll be fine kind of thing. But yeah, I remember 2008 sitting down with my uncles who worked in sort of tangentially related industries. Like one worked in home building products and the other one worked in furniture sales. Big scared about their future as they were in their 50s and 2008 was happening. And I remember sitting down. It was Easter. It was a holiday, and we were sitting around. After we ate Easter dinner together, and they were talking about how they were worried about things. And they were lamenting how lucky their high school buddy, that was my football coach, was that he was retired now at their age with a full teacher's pension and didn't have to worry about this kind of stuff while they were still business owners. And I remember that. Now I look back on it, it's like, man, I was probably 20. let's say late 20s, 28, something like that. And I remember like being like, "No, everybody, I think things will be okay." They didn't say it, but they must have thought, "Oh man, this little shit. Ah man, he just doesn't know. He doesn't know the world." All right. Any symbols to look at as I'm starting to kind of pontificate and ramble about old man Norok stuff. Hey, thanks, Richard. Can you say again how you use the green line on Ichimoku on the weekly daily indicator? The green line is the Kijinsen, okay? And I don't use that very much. Here's why. It's not that I think it's bad. It's just that what I have done is I integrated the Tinkinson, the red line, which is the 9-period 50% level, into my spike strategy because that's a lot better because it's a 9-period and faster. It's a lot better at identifying when you have sort of a 1-bar kind of reversal, when you break a major low and then you close back inside the Tinkinson. That's what I really like to look for these kind of spike reversals because they're very quick. Okay, and then sometimes they also get back inside the green. Okay, which is the Kijinsen, which is the 26 period, but sometimes they don't. And I'm using Dollar General as the example. Again, this is Ichimoku overlaid. Take it off. That red line's the Tinkinson. This ends up being, again, for my spikes, a better indicator because you see on this daily spike that happened on earnings of March 2024, spiked up, came back, closed inside the Tinkinson, which actually ends up being my entry point for these kind of reversals. At the same time, though, if you notice, the green line didn't quite get there. And so I found that for the purpose of this particular little indicator strategy of this pattern reversal, that was the better Ichimoku line to use. Now we zoom out and we look at broadly the cloud itself, the Ichimoku cloud. That does a better job, I think, and I've seen, of containing the trend itself. Okay? And so really the two Ichimoku things I use the most are the cloud and the Tinkinson. Now, the Kijinsen, the 26 period, the green line, it's still useful. It's still very useful because we're going to use Bitcoin on the weekly, for example, because that is what it's holding. On the weekly, Bitcoin is holding the 26 period that Kijinsen, roughly, but that's the level it was at. But you'll notice that it's sort of, it kind of moves around a little bit here. It never really made a nice, clear, flat line. But they're still based on the same concept. They're still based on 50%. And so what I do in any case, coming from an Ichimoku background, is I take off Ichimoku and I draw the 50% myself from what it really should be. Because, of course, Ichimoku is going to be constantly rolling as time goes along. And so this, in particular, when this hit back 2 weeks ago, that support, that 50% support, that low that created it was 29 bars ago, not the 26 that Ichimoku is based on. So that's why you have the Ichimoku line moving up. It found that level here, for that little spot right there. That's where it was correct. But you see how you really have to go in and manually look, what is the trend? What is the swing low? What is the swing high? And then do it manually. So it can be a good guide. But that's why you don't see me use it as much. Because then when you start getting into that middle ground, the Tinkinson being the short-term reversal, the cloud being the long-term trend, Kijinsen kind of sits there in the middle. And I used to use that a lot. But what I found when I'm trying to trade is we can know where it is, but we really just have to kind of do the actual 50% ourselves. Because that 26% can be a little bit too little or a little too much, but we need to validate it. And so that's why I'll get that. Does that answer your question? I hope it does. A very good question, by the way. D, what about the economics saying that every 8 to 12 years there is a recession? I ascribe to this. And we technically had a recession in 2020. Actually, what I look at more from a trading investment perspective is not the recession as the market, because I can't really make money from a recession. I make money from buying things at their lows. Does that make sense? And so that's when I start looking at crashes. And of course, 2008 was a market crash. And the difference between a correction and a crash, a correction is 5 to 10%. A crash is somewhere in your 30 to 40%. And in the case, we're looking at the SPY here from high of October 2007 to the low of March of 2009. That was 57%. So that's a big crash right there over a long period of time. COVID was a 35% crash, and so it was too. And these two events were 13 years apart, and so COVID was kind of late. Notice how I think, let's see, what was it in the September 2018? That was only 20%, so it didn't really classify as a crash. It was kind of in between, but of course COVID was. And so, yes, on average, 8 to 12 years historically has been the case. And so, yes, I do look at that. But if we assume, again, that is the case, if we say that 2020 was our last crash, then we're getting into sort of the middle ground. Well, actually, excuse me, sorry. Okay. So we had a 27% correct. Again, it's in that middle ground. Let's call 2022 a crash. Actually, no, that's not accurate. Let me just make my point. I think we're a little too early for us to start worrying about it. And I don't think that we're going to see one in the near future, despite what people are saying. It's just really a kind of a question of how deep of a correction is this going to be? Does it go into the 20% range or not? I think the most likely, if you were gonna like put a gun to my head and ask me what year do you think the market could possibly crash based on almanac level statistics, I would then bring in the presidential cycle, which actually has the third year of a president's term as being the statistical worst, which would put us at 2027 being the year of the crash. And that would fit more into this 8 to 12 model because it gets closer to that 8 from 2020. Does that make sense? It's all just astrology for men, but that would be what I would say there. I would exclude COVID. Okay, so sorry, I just read your first sentence. You would exclude COVID, the dot-com. Yeah, so the dot-com bubble was in 2000, and then the 2008 was, of course, 8 years later, so it fit. And then, but you have to have something in there to kind of. So I think you have to include COVID, and you have to take that as like the marker for it being a crash, just because it was over 30%. So, yeah. That being the case, if we say it was 2020, then as we get closer and closer to 2028, that's when you should start looking out, because that's when you're getting to that 8-year mark. Otherwise, you're looking at us having 25 years. Excuse me, no, not 25 years. You're looking at us having 18 years without a crash, and then we're far beyond that model. Again, now I'll actually insert the argument that most people make, which is that we've been having a zero interest rate bonanza that has kept the market propped up, and that's probably true. So maybe all bets are off. I don't know. Wait, so how do you use Ichimoku for entries with 50% reversals? Okay, did I answer your question by going through that? Yeah, they definitely changed the definition of what a recession is, you know. Jen asked, have you compared Dollar General to its competitors like Walmart, Target? I don't particularly like Target. Actually, my girlfriend had Target in her account because she liked it, and we actually closed that out like 2 weeks ago. Good that we did, because it wasn't doing, out of her whole portfolio, the things she chose, it was doing the worst, and so we cut the loser. So Kroger, we all love Kroger here. You know, these are the kind of things that I wish people would pay more attention to instead of crypto meme stocks. I mean, just things like Walmart was up almost, I think, 80% year over year here when I got to the top. Now it's doing a little pullback here, but just boring stuff. Or you would think Walmart would be boring. Costco, retail stores, all that kind of stuff. I mean, Costco has just been redonkulous since 2020. 224%. Yeah. Yeah. All right. Any last questions? I hope I answered that question about Ichimoku when using it. Um, I broadly, I like to use a manual 50%. So, but then what happens is if you're trying to find that, you end up bouncing around the time frames trying to find an Ichimoku level to match it perfectly, and it doesn't quite. So what pray tell then is MicroStrategy in? I wonder. Swing low to high. Ooh, Valley of Risk. Valley of Risk. Sailor gonna pull it out? Is he gonna buy enough Bitcoin? Oh, what was that thing I saw this week? I think I bookmarked it. Let's see, bookmarks. JPM MicroStrategy Bitcoin. Now, of course, this was by JP Morgan, but they say that 28% of the capital inflow into Bitcoin for last year was just MicroStrategy. Quarter of all the Bitcoin bought. Interesting. All right. Hope that works out for him. It's bold strategy, Cotton. All right, everybody. Thanks for joining me and with your questions. I love to teach. Catch me next week. We'll talk more. And make sure you join Discord. Make sure you like this if you got some stuff out of it, too. I'd really appreciate that. Have a good weekend. And, yeah, okay. Oh, I will. All right. Talk to you guys later. See ya.